Hello and welcome to the BizNews Breakfast Briefing. I'm Lucy Ferreira for BizNews.com. It's Friday the 5th of August, and in today's show we start off with Alec Hogg's daily market report, where he'll be unpacking essential insights on the overnight market movers, looking at the big local and international stories and providing us with context on why they matter and what they mean. After that, we have the daily news update from our partners, the FT in London. If you're looking for more in-depth news pieces over the weekend, head over to BizNews.com or BizNews Radio on your podcast platform, where we have some fascinating interviews that have had our community abuzz this week. Some essential pieces include an in-depth interview with Helen Ziller, where she shares fundamental views on what is happening in Nelson Mandela Bay, the recent by-election results, and cautions us against blind optimism for a post-ANC rule in South Africa after 2024. We also have an excellent interview with Action SA's Herman Mashaba on the party's work to become a major force in the 2024 elections and his approach to the other political parties that are likely to be allies in ruling coalitions as South Africa's political landscape changes. Michael Apple also spoke with Lord Peter Hain and Athol Williams in separate interviews on Bain & Company being banned for tendering for government work by the UK for 3 years. And, in the best of BizNews, you can read Magnus Haystack's viral article, The Trillion Rand Property Collapse. You can find the links to these pieces in the show notes. But for now, it's over to Alec with today's markets.
Thank you, Lucy. Good morning. It's Friday, the 5th of August. We've got a slight change in our format as from today. No longer will we be providing you with highlights of some of our interviews. We think it's better that you just go along to BizNews Radio and listen to them there. It's not just we who think that. We've had feedback where some of our community members have been suggesting that they want to just skip straight through to the Financial Times report rather than going through an interview, again, that they've already listened to. Okay, well, what I would suggest, have a listen to what David Bacher was telling me yesterday. He's from Corian Capital. That was on the Corian report. You'll also find the link in the Daily Insider newsletter today. Doing it this way will give me the opportunity to maybe expand a little bit on our market report and give you a bit more insight. That's for background. Let's get on to today's markets. It was a kind of mixed bag for markets last night in the United States. S&P down 0.1%, Nasdaq up 0.4%, the JSE All-Share Index up 0.2%, so really not a lot to write home about there. The big news internationally, though, was the Bank of England raised its interest rates by 50 basis points. This is the major bank rate there, from 1.25% to 1.75%. That is the highest increase, though, since 1995, 27 years to be exact. The increase was expected, but what wasn't was the commentary that came along with the report about the UK economy being in trouble, the concerns there that they might be entering a period of stagflation. This is the worst of all possible worlds, where you don't have growth in the economy, but you have high inflation. The result of that was a decline in the pound against all currencies, including the rand. It lost 19 cents against the rand, and today it'll cost you 20 rand and 17 cents to buy a pound. The rand did gain some ground against the US dollar, up 12 cents there against 16.61, and no change against the euro. The other bit of good news to come through overnight is a continued decline in the Brent crude price. Almost $3 lower this morning at $94.23 per barrel. This takes the decline to $6 now in the last couple of days. Reason? Members of OPEC Plus, in other words, the major oil producers of the world, have decided to increase their output, not as much as had been hoped, but at least they are bumping it up. And the anticipation is that a decline in the global economy and an increase in the oil production means that the oil price itself will come down a little bit. Now, with the rand going up the way it has in the last few days and the oil price coming down, that gives us hope for another decline in the South African petrol price come next month. The gold price, $20 higher, $1,791. Bitcoin is holding steady at $23,137. That's 0.1% higher. And the Geltec basket at 433 Rand and 51 cents is down 3%, but it is a day behind what happens in Bitcoin, so you can expect a slight increase in that one today. The news coming from the Wall Street overnight was primarily earnings driven. They're still bringing out better quarterly results than had been anticipated, and also a little bit of good news coming out here and there. Coinbase, which is a cryptocurrency exchange, jumped 8% after the announcement of a partnership with BlackRock. Lucid, which is a electric car maker, produced a set of quarterly results that the market did not like, and that saw that share price dropping by 10%. On the other hand, Tesla is steady, and this after shareholders gave approval for yet another share split. They're going to be split 3-for-1, which will bring the Tesla shares into the ambit of more retail investors. Smart moves there by Elon Musk, given that he did a share split not long ago of 5-for-1. So the 2 share splits within the past year, and it just makes it more accessible for retail investors to buy the Tesla shares. In the US, they don't have fractional purchases like we have in South Africa, in particular with easy equities, but they do enable very cheap purchasing of 1 share at a time, so a single share at a time. But of course, if your shares are sitting at $800, that's quite a lot for an average retail investor. If they're sitting at $250, it makes it much more accessible. The Labor Department in the United States brought out figures which showed that unemployment is rising very slightly. At the end of July, there were 260,000 people who entered the unemployment market or asked for unemployment benefits. That was up by 6,000 on the week before. So it's slight improvement there, but nothing really to get excited about. But what is interesting in the United States, and something that we can absorb here in South Africa, is the mortgage rates there. And this is for a 30-year fixed mortgage, fell to the lowest level since April at 4.99%. So just under 5%. You can get a 30-year fixed mortgage rate in America. A week ago, it was 5.3%. And that's telling us that people are really believing that the Federal Reserve is getting inflation under control and will keep it under control as well. Remember, inflation came out in the most recent month, for the month of June, and it was at 9.1%. The inflation figure for July is going to be real interesting. If it's lower than 9.1%, it'll confirm all of these views that inflation there has peaked. More news from the US, which will affect us here in South Africa in time, no doubt. There is a new front being opened on the streaming wars. Warner Brothers and Discovery are now talking about going one better than Netflix. Remember, Netflix are going to be adding adverts to their subscription service. Warner Brothers and Discovery are now going to be offering free streaming, but ad-supported. And once that starts, once that genie is out of the bottle, it spreads very quickly around the world. Here in South Africa, well, on the Johannesburg Stock Exchange, big losers were Sappi and Tiger Brands, which lost 4% each. Nedbank was down by 3%, in contrast to Standard Bank, which was up by 2%. And then Impala Platinum was down by 2%, in contrast to Kumba, which was up by 3%. Richmond's doing well, that was up by 2%. And a couple of shares that I wanted to highlight very quickly for you that have done, one done very well, one done not so well. Grindrod jumped another 6% yesterday. That share price is now at R9.89. It's doubled in 2022. Grindrod's appeal invested heavily in the port in Maputo in Mozambique, and that port is booming. Private sector getting involved in infrastructure, and look at the result. On the other hand, Sepaku Cement is reflecting the dire state of the South African infrastructure spend. That share price is down 7% overnight, takes it down to 116 cents. It started the year at 176. And just closing off with the BizNews portfolio favorites, another good day for Uber and Amazon. You might recall that both of these companies released financial results for the quarter to the end of June that the US market really loved. Amazon up another 2% last night to $142.50. This share was at $114 ahead of its results. Uber, another 5.5% gain, and that takes the share price to $31.85. 2 weeks ago, it was sitting at $23 a share. Very happy to have added ABSA to the BizNews portfolio. That's sitting this morning at 175 Rand a share, up 1.5%. We were at 151 2 weeks ago. And looking forward to Palantir's results next week, there is a lot of anticipation about what will come for this company in the BizNews portfolio, up 1% overnight at $11.32. That one was trading at $8.78 2 weeks ago.
Good morning from the Financial Times. Today is Friday, August 5th, and this is your FT News Briefing. U.S. unemployment claims have hit a 6-month high. The UK's central bank says inflation has taken a huge toll on living standards, and you got to go back to the 1960s to see anything like it. Plus, Europe's central bank recently dragged interest rates out of negative territory for the first time since 2014. We'll take a look at how lenders are dealing with the new environment. I'm Mark Filipino, and here's the news you need to start your day. Last week, new unemployment claims in the U.S. reached their highest level in more than 6 months. These numbers that came out yesterday signal that companies are firing more people. Significant layoffs at technology, retail, and crypto businesses have added fuel to the fire. Economists told the FT these new unemployment numbers are a sign that the labor market is cooling off. But they don't anticipate a big jump in unemployment since there are still more job openings than there are workers to fill them. The Bank of England said yesterday that Britain is facing a protracted recession, and the country is facing the worst squeeze on living standards in more than 60 years. This largely comes down to inflation. It's high, and the BOE says that it could reach 13% this year. And so, the Bank of England raised interest rates by 0.5 percentage point on Thursday. To talk more about the bank's move is the FT's markets editor, Katie Martin. She joins me pretty much every Friday. Hey, Katie.
Hey, how you doing?
So, Katie, that was a lot. The Bank of England said a lot yesterday, in addition to an interest rate hike. What did markets do in response to all this?
Yeah, so normally what you would expect if you have a not unanimous, but an 8-1 vote at the Bank of England in favour of raising interest rates by that sort of degree, you would expect to see sterling rising, right? This is what currencies like. They like it when central banks raise interest rates. Not this time.
Why?
Partly because they'd done a little bit of buttering the market up for this. We kind of thought that it might be coming. They'd dropped some hints that they might do 0.5 percentage point, not the usual increment of 0.25 percentage point. But also, this outlook is just horrendous. And it's very difficult to build a case for putting money to work in the UK with this sort of economic nightmare coming down the track, for want of a better word. They're talking about a recession from the fourth quarter of this year, and they're expecting it to last for 5 quarters.
Oh, wow.
Yeah, growth is going to be very weak. Unemployment is going to sail higher, and incomes are just going to be crushed in real terms. They understand that this is incredibly difficult for people, and that comes in a very particular political environment that we've got now. But also, yeah, it's just their way of saying, look, brace yourself. This is really going to hurt.
Yeah, and the political angle is extremely relevant. We're talking about a prime minister race between Liz Truss, the UK's foreign secretary, and Rishi Sunak, the former chancellor of the Exchequer. How does politics play into all this?
So both of the candidates are talking to their base. They're talking to the British population, and Liz Truss, who is far and away the leading candidate at the moment to get the job of leader of the Conservative Party and therefore Prime Minister, is talking about maybe changing the mandate of the Bank of England. Now, we don't know exactly what that might mean, but we do know that the mandate hasn't been changed since 1997 when the Labour Party got into power and handed independence to the Bank of England. So the suspicion is, does this mean that some of the independence will be taken away? Might there be more political interference in what the central bank does? Would that be helpful or unhelpful in terms of actually succeeding in getting inflation down? Because generally speaking, politicians don't like to see interest rates get too high because it pushes up people's mortgage payments and it can have an adverse effect on some parts of the population, but not all. And might there be some pressure to keep interest rates lower? I don't know. I'm thinking aloud. We don't know exactly what this might mean yet, but it does come at a very awkward time.
Right, because of the unpredictability, because we don't know what this policy is, and we're just kind of getting a hang of what the BOE's monetary policy looks like in this state.
Yeah, and we've got enough to deal with if inflation really is going to 13%.
Yeah. Hang on to your hats, folks. Katie Martin is the FT's markets editor. Thank you, Katie.
Take it easy.
The Bank of England's rate hike comes on the heels of similarly aggressive moves by the U.S. Federal Reserve and the European Central Bank. European interest rates came out of negative territory last week for the first time in 8 years. The FT's banking editor Stephen Morris says that's changing the game for European lenders.
It's a lot easier for banks to make money. And it's actually been quite stark what's happened in the second quarter of this year. Almost every European bank has beat its earnings forecasts for the first time, at least I can remember, really driven by this higher rate environment. And when I wrote about it, it's kind of interesting to see how this will play out. Because whilst banks are getting this big first in a decade windfall from higher interest rates, it's coming in a looming recession, a cost of living crisis, and a potential surge in loan defaults from kind of stressed consumers and small businesses and large corporates, borrowing less and spending less money as they attempt to make it through a recession. So it kind of remains to be seen where this balance will lie between a surge in earnings from higher interest rates and a potential surge in defaults and bad loan losses on their balance sheets from the threat of recession and the cost of living crisis.
So, Stephen, does this high rate environment take pressure off other parts of banks that are struggling because of the recessionary environment? Like mergers and acquisitions or IPOs, things that banks had been leaning on for revenue in the past 2 years during the pandemic that now aren't doing so hot.
Yeah, well, last year was a very good year for investment banking, and by that I mean the advisory and M&A and capital markets teams of banks. There was this SPAC boom, special purpose acquisition vehicles, which resulted in a lot of IPOs, which has now completely collapsed, and all the earnings, as you say, have disappeared. But for the first time, I think, in years, sort of retail, consumer, and sort of small commercial parts of these banks are now seen as an asset, no longer as a liability. They can actually start generating income for banks. And that really is, as some of the executives and analysts I've been talking to have told me, that really is a game changer for them.
Stephen Morris is the FT's banking editor. Before we go, just a note that the folks over at FT Weekend are doing something special for the next few weeks, a food and drink mini-series. Over 4 episodes, FT Weekend host Lila Raptopoulos will talk to experts on wine trends and cooking philosophy. We'll hear from big names like cookbook writer Andy Baragani and chef Aisha Nurjaya.
What is a secret in cooking that makes everything taste better?
To do it while you're in a good mood and to do it with an open heart. Because angry food tastes angry.
You can only hear this bonus series by heading over to the FT Weekend feed. So go search FT Weekend wherever you get your podcasts and subscribe. The first 2 episodes are already there and waiting for you. You can read more on all of these stories at FT.com. This has been your daily FT News Briefing. Make sure you check back next week for the latest business news.
And that's all for today's briefing. If you enjoyed this episode, follow BizNews Radio now to get all of our interviews and daily market updates as soon as they're published on your podcast platform. Bye for now.